Good morning, everyone. Welcome to the earnings video conference for the first quarter of 2025 for Allied Technology. My name is Adriana Santos. I am the analyst of the investors of the company. Before getting started, I'd like to say that this event is being recorded as well as translated simultaneously to English. All the participants will be here just as listeners. Then we will start our Q&A session. If you have any question, feel free to send it through the Q&A button located in the lower part of Zoom. I would like to say that the statements contained in this presentation that are related to business projects and projections about operating and financial performance, that they are internal beliefs and estimates based on the company's administration expectation. Today we have a Stein, CEO, and Talita Bastos, the financial director and RI for the company. Now I'd like to pass the floor over to Sylvia, that is going to start talking about the highlights of this quarter. Thank you, Adriana. Good morning, everyone. Thank you so much for your presence here. Today, we will provide you with some details regarding the results of the first quarter that were let last night. Let's get started by remembering the three pillars of the company. I'll get started with the right portion that is connected to our distribution. This is where the company started a few years ago. First of all, smartphone, cell phone distributor nowadays, uh, devices in general, computers, video games. We are one of the biggest s- distributors nowadays. In 2023, we started the distribution to Latin America, creating Light AM. The pillar in the in between, we're talking about our retail stores. We have 114 stores. We have a Samsung, the main shopping malls in the southwest in Brazil. We are one of the biggest partners of Samsung. And on the left side, we have our digital retail. We have Mobcom that is connected to the main marketplaces in Brazil. We also have different strategical partnerships. The longest one is iPhone Forever, iPhone e para sempre. It's association between us, iPhone, and Apple, which is one of the main sales channels of iPhone to Brazil. Recently, we created an association with Nubank. Nubank offers to their partners a special financing plan for the purchase of iPhones, and we manage the HP online store. Considering all the categories that we are present, we have a significant market share in the Brazilian retail. So the examples of the first trimester, 9% smartphones market share, 13% of video games market share, and 6% of notebooks market share. We are still facing a rather challenging market. First of all, because of the high interest rate in Brazil, which impacts the capacity of retail to finance the investors, as well as the financial costs. Considering this challenging scenario that started last year, now we are facing the same scenario this year, but we believe that the amount of businesses that we have will still bring a result resiliency besides the market scenario. I would like to start by talking a little bit about the results overall. So when it comes to our revenue, so quarter after quarter, we dropped 16% year after year, but I would like to provide you with a second vision. When we look at our Brazil operation and our Miami operation, what we see is that Brazil grows 4% quarter after quarter. The main electronic market is the cell phone one, is the biggest market among everything. The cell phone market in Brazil grew 6% and light market grows 4%. We grow more than the market. Where did we suffer? In our Miami operation, dropping from 450 million to 155 million. We'll talk a little bit more about that. The midsection here, we see our net income. If we forget the JCP fact that brought us a benefit of 34 millions, which is not recurrent. Here we compare a net income last year 16.1 million to 15.1 million, very in line with last year. Since we're talking about 15.1 million in a smaller revenue, this took a toll on our net income, a percentage of 1.3%. Here, when it comes to the earnings of 2025, we are still one of the highest dividend yield paid of 18.9. We committed ourselves with a payment of 122 millions of reais. Now I'm going to talk a little bit about the pillars of the business. First of all, the distribution. Brazil's distribution is the big highlight of the first quarter of Alight. Here on the left side, we see Brazil's operation, or the Brazil distribution as a whole with all the products. Here we grow 8%. Just to remind you, the market of cell phone grew 3% and our distribution grows 8%. If we take a look at this distribution, only the cell phone part, in cell phone we grew 20% in the first quarter. As a consequence of that, we grew our market share, our market participation in Brazil's market in 1.1 percentage. On the right side, we see our Miami operation. It's been 2 quarters that we've been suffering a little bit, but the news are good. The fourth quarter of last year, we suffered a lot with the volatility of the Latin American currency connected to the dollar that brought about an instability considering the prices of the products, and it really dropped the size of the market here. This volatility is much smaller nowadays. It's much more stable. And on the first quarter, we had a new surprise, which was the new tariff treatment of the United States government. It's important to highlight that in terms of cost, we were not impacted by these new rates. The way that we operate in the United States, the products, they don't have this fiscal entry. We buy in Miami, we sell in Latin America. So any rate that is applied to the United States does not impact our cost. However, the process to purchase and buy with this new rate package changed it dramatically. So as us and our distributors, we had to adapt. So it took a while for us to get adjusted. So we wrapped up the first quarter with all the process implementations, and now we will get back on track, right, compared to what we were used to in the past. Now let's talk a little bit about the digital retail. Here we have our store, Mobcom. This is connected to the main marketplaces in Brazil. Here we have iPhone for sempre or for always, where that we launched it in August. It's one of the main sales channel of iPhone in Brazil for the 5th year in a row. Recently, we launched Nubank, the association with Nubank in September last year. The figures, right, that we are presenting in terms of sales, they are much larger than the expectation that we used to have. And we have a partnership with HB. We manage their online store. If we compare to last year, we grew 3 times year after year. Another area from the online that we've been investing in, and we haven't really talked a lot in our results call, is our service sales. We started, really betting on the service sales as a pillar of our business. Our main service nowadays, Microsoft Office and the McAfee antivirus that are sold as an electronic way. If we contrast year after year, we grew almost 4 times. And this business pillar is connected to the final consumer. And for us, it's very important that we provide the final consumer a treatment that this person might have a very good experience. And the reflect of that is that we earned the RA1000. It's the seal from Reclame Aqui, one of the greatest recognitions of excellence in service in the country. And we are very proud because of that. Now, when it comes to the B&M retail, so we want to keep improving and we want to decrease the cost. In this fourth quarter, we reached 475 uh, growth. If we compare it to 2020, that was 206, we are 235% more than 2020. How do we do that? Focusing on the quality of the service as well as other items that we can aggregate the sales in our stores. First of all, in this first quarter, the quarter that we launched at Galaxy S4, we were able to grow our average cost 5% connected to last year. The second and very important for this market is the annexation of the wearables on the cell phones. We're talking about the earphones as well as the watches. In this first quarter, more than half of the cell phones that were sold, they had like a wearable that was attached to it. The third is the accessory sales. This is very important for the experience of the consumer and the increase of revenue of our stores. So year after year, we grew 193%. And the last topic, our insurance sales. So once we sell the cell phones, we sell the insurance. So year after year, we were able to reach an 85% growth. With that, we were able to grow in revenue per sales point, which brings viability and profitability to our business. These are the three pillars of allied business, but I would like to highlight one of the areas that we've been touching upon. Some years ago, we started the Trocafy. Trocafy is our purchase and selling of these reconditionals. We have the website, 1P, and we also have the Trocafy connected to Mercado Livre and Magalu. We have two BM retail on Center Norte Mall and El Dorado Mall. And we also sell this to some retail, some partners that they sell this to their consumers. Where do we grasp these cell phones to recondition them and sell them? Nowadays, we are partners of the main sales point of Brazil, Vivo, Claro, of all the Samsung stores, Fast Shop, and we also uh, captured from iPhone para sempre. So whenever a consumer accesses a Claro store, they will have the opportunity to get their old cell phone purchase. So we recondition and we sell to our purchase point. If we contrast year after year, our growth is 3.3%. We bet on this market because the growth rate, the estimated growth rate for this market in Brazil is much higher than the sales of new cell phones. If we take a look at the penetration of Brazil and the United States, in Brazil, the reconditions, they go through 20%, in the United States, 27%. If we contrast the power of purchase that those different audiences, we believe that Brazil will reach the penetration um, rate as we have in the United States. So we have a significant growth. We have everything to become the best player of the segment in the market. We are still betting on four drivers of growth here. The first one, our international operation, we still work with not so many products, Xbox, Motorola, and Apple. And we are present in 16 countries of Latin America. So we have a growth opportunity in terms of portfolio and in the geographical aspect. So Truckify, we're talking about a crescent market. We're talking about a growth driver for us. Third, we are betting high in the B2B, right? And we're bringing in new people from the market. We just brought a new director to the area. This is a very important driver for us to growth. And lastly, we will keep betting on our B2C partnerships as the one that we have with Nubank, Itaú, and HP. To wrap up our key figures, these figures are concerning the last months, wrapped up the last quarter of this year. 6.1 billion of gross revenue. 100, we're talking about 114 stores, 4 distribution centers, and in the last 12 months, we sold 6.1 million products. And if we only take a look at the products that were delivered to the final consumer, we have 527,000 deliveries. So we have physical stores and we have 1.5 sales store sales. We grew a lot connected to the last year, and Allied overall is made up with of 1,100 employees. So now I will pass the floor over to Talita to detail a little bit more our earnings. Thank you so much, Silvio. Thank you, Adriana. Good morning, everyone. I would like to thank you to be with us for this other earning video conference. We started with some highlights. As Silvio mentioned, 122 million reais in terms of interest on equity to be paid in 2025. Cash position, we wrapped up the quarter with 338 million. This is a very good position in the Brazilian scenario. Financial result improved 22% with regards to the last quarter. In our net debit, we have 140 million, so 0.7 considering our EBITDA. Now let's talk about the key figures. I would like to point out the context of the macroeconomical in the Brazilian market. Selic compared to the first trimester grew 3.5 percentage points. So we left 10.75 to 14.75. And according to research, CNC, the trust of the consumer concerning the investment based on the stocks, we saw a drop of 1 point. When it comes to the employment rate, this level is constant. The biggest concern due to this interest rate has to do with the stock investments. Due to this challenging scenario, Allied shows itself as a very important player for the manufacturer as well as for the customers. The net revenue was 1.2 million reais. It's a retraction connected to the first quarter of 2024. Our gross profit of 146 million. It's a reduction. It's a smaller reduction compared to 2024. So it shows a earning of 0.4 percentage points. Our EBITDA of 14.2 million, which is an increment of 0.7 percentage point. In our accounting net income, we're talking about 15 millions and 1.3 percentage in terms of profitability. When we compare, excluding our JCP, it's a gain of 0.12 percentage points compared to the last quarter. Taking a deeper look in terms of our distribution, Allied had a growth of the Brazil distribution of 7.7% quarter after quarter, and the Miami distribution grew compared to the previous quarter. Considering Brazil, besides this growth in the distribution, the biggest strength, the highlight of the first quarter was our growth of 20% in terms of smartphones. That grew 3% in amount the same period. That made us get 1.1 percentage points in market share value. When it comes to the international distribution, as mentioned by Silvio, we had lots of impact in terms of the devaluation of the currency in the last quarter of last year. In the first quarter of this year, the currency were a bit more stable, but we had an impact, operational impact due to the tariff changes, considering the Chinese products. So even though we're talking about this context, Allied was able to grow versus the last quarter. It grew 12.3%. When it comes to the gross profit, Allied still maintains its profitability here. We don't see much changes. When it comes to our retail, right? Our physical retail grows 1.5%, uh, considering that 2024 was a year that was very important for our physical retail. So to grow on top of a accelerated growth, it's a very good result. In our digital retail highlights revenue growth from Talkify, as well as digital licensing services. Looking at the revenue, our physical retail drops 2.6 because quarter after quarter we close 10 sales points, the small ones based on our profitability and the profitability of the sales point. So it was a small drop. Our digital retail as a whole, it falls 3.8%. On the digital um, retail, besides Truckify, we had 210% of growth of the HP store as a seller in the main marketplaces of Brazil. Our physical retail, we had a average ticket growth, the high conversion of wearables, and the sales of S line, that it's rather representative for Samsung as a whole, and our high insurance conversion that brings a very good profitability for the business, besides contributing with the revenue. As Silvio said, we grew 2 times our revenue per store since the end of the pandemic, which is something very significant considering the challenging scenario of retail, as well as the change in the behavior of the consumers migrating to the digital. Now, having everything into account, all the different channels, Allied Brazil grew 3.8% quarter after quarter, which is very representative considering that that goes beyond the GDP perspective for 2025 as well as the family consumption for the same period. Besides our growth, gross profit, here we have for percentage. In terms of gross margin, we have an stability considering the different channels. I would like to highlight that retail as a whole has a new threshold in 2025, considering the mix of channels that we have uh, with the exit of Sodi and the increment of Truckify, as well as the sales of licenses which is a rather stable profitability and larger than the other ones. So the operating profitability and financial results Allied was able to improve its operating expenses compared to the first quarter of 2024. And the financial result improved 22% compared to the first quarter of 2024. The selling expenses, so besides we decreasing from 92 to 86, it's also important to highlight the gain of profitability because when we analyze it based on the retail, that is the biggest driver, the bigger uh, retail fell 3.8% as the expenses reduced 6.5%. So it just shows that we want to keep improving profitability, not only considering the physical retail, but our digital retail. Our administrative expenses reduced, we saw a significant reduction of 6 million. So this is very interesting. So from 31 million to 25. So this is a very relevant figure considering our general and administrative expenses. Financial result, so we improved 6 million, and compared to the first quarter of last year, this increase was only connected to 2 million due to the Selic, right? It grew 32%, and Allied has putting a lot of effort to pay its gross debt that we will talk more about in the next slide. So that's Allied paid 40 million in terms of structured debt in March. So we finished the Saudi operation. we had a 140 million in terms of net debt and 0.7 in terms of low leverage. If we compare to the net debt for last year, it's we have a 1.1 gain of in terms of leverage. Allied has to pay its structural one. So in June of next quarter, we will start amortizing the fifth debating, and the fourth quarter of 2025, we're also going to get started the amortization of sixth debenture. And our cost is still rather stable based on the structure and CDI plus 2.4%. The cash evolution. So Allied wraps up the semester. This is a semester that we have to adjust the stock level. So we have a slight investment. So from 30 million is investment in our turnover, and we made the payment of our JCP in April. And we were able to pay 40 million worth of that in March. So that's why we see this payment of 58.7 million as well as that. Even though everything happened, we wrapped up in a very solid way as a result of the main focus of the company, which is besides the maintenance of its operational profitability, Allied has a constant concern about its cash flow um, management, considering this scenario of like a high level Selic. Overall, I believe this is the strategic diversification of our results. So I believe that Allied makes the bridge between manufacturers and customers many ways. We've seen a good strategy that shows consistent results and constant profit. So it was another quarter of net revenue worth of 1.2 billion, gross profit around 12%, 146 million, accounting EBITDA 50 million, 4.2%, and accounting net income around 50 million. I believe overall this is what we would like to share about Allied. And thank you so much for your attention. Have a wonderful day. All right, so let's get started with the Q&A. Remember that for you to send your question, you have to click on the Q&A button on the lower part of Zoom. The first question came from Julio Almeida. He congratulates us on the results and he comments about our financial health as well as some debt levels from the company. He asks us to talk a little bit about the maintenance expectation of these figures, of these amounts. Now I would like Silvio to answer, okay? Or maybe Talita, okay, Talita. Okay, thank you, Adriana. Thank you so much for the question. It's a very important question considering the Brazilian scenario. Um, we know that Allied has a constant management of its inventory as well as our debt. We have a structured debt that is going to be amortized in the beginning of June. And the main thing, considering our management, is we don't want to enhance our expenses, financial expense, considering the high interest rate, not only for now, but for the next 2 years. So this scenario is made thinking of the liquidity, but Allied is in a very comfortable level, and the big concern has to do with not enhancing our financial expenses because it can be rather representative if we have any increase in net debt, structural debt. Okay, thank you so much. The next question came from Marcela. She would like to talk a little bit about the tariffs in the United States. I believe that you talked about this, but if you could put more details on how this can impact the next quarters. Okay, can I answer that? So the new taxes in the United States, they impacted the products that we sell, like cell phone, computer. but they didn't really impact allied business. The way that we are structured in the United States, we have we are in a fiscal area where we receive the products coming from China or coming from the United States. And we didn't really internalize that in the United States. From there, we export to Latin America. So besides physically being there, fiscally, we didn't really access the United States, these new uh, taxes, considering the electronic devices, they impact the products that entered the United States. So we're not there. What made our lives harder in this first quarter, but it's something that we have already solved, that these products, they had a rate of 20% determined by the United States. And due to that, the process for you to separate the products that will go to the United States and the ones that won't go to the United States, this became more complicated, considering the warehouse standpoint, as well as the way that we have to, you know, come up with the orders, as the way that the customers have to buy from us. So it was a quarter that required lots of adjustment, considering all these processes. We went about this. We are back on track, right? We got back on track in terms of the pace of our operations before all these alterations. So we believe that now we won't be impacted anymore. But whether the market will go well or not, I believe that we are going to keep up with everything that we have done before. Thank you so much, Silvio. I would like to highlight that you can share your answer through the Q&A button here, and we can ask the question here in the video conference. Our next question came from Luis Chagas. We're talking about two questions actually. He comments a little bit about the consumption of working capital in the first quarter of 2025. And he asks us how we are seeing the dynamic of this line from now on and the inventory optimization in 2025. And he makes a comparative analysis considering the EBITDA growth versus the revenue. So he would like to understand some of the leverages that brought about this result, the efficiency initiatives that the company has been resorting to. I would like to pass the question to Talita, please. Good morning, Louise. I'd like to thank you for the two questions. When it comes to the cash consumption, I told you that this was an inventory batch, right? It's seasonal, so it's common for us to have an inventory increase in the first quarter due to the big turnover considering the last quarter of last year. And yes, we are concerned about that. We don't have the intention that this is going to be a constant, like this enhancement of working capital. We have a control of our forecast to be able to keep up with this level and not take a toll on our efficiency in terms of working capital. So it's something seasonal. So the idea is that the next two quarters are more stable, and we batch the fourth quarter with a big turnover to wrap up December 2025. The second question, considering operational efficiency in our increase of EBITDA, it's very good. Allied has among one of some of its strengths, the management of delivery, as well as the monthly analysis in terms of fiscal opportunities. So Allied um, is very connected to keeping the gross profit of its operations. Even though we're considering a hard sales scenario, we have a very intense work to keep the profitability, considering negotiations, fiscal, or logistics. So we focus a lot on that. We are fairly active. And also when it comes to expenses, we are monthly analyzing where it's a rather granular analysis of how we can maximize the expenses as well as the optimizations via automation of some processes or maximization of uh, delivery routes. So we are constantly trying to maximize our processes, try to make it our operations more profitable. So we want to increase the profitability of our business as a whole to ensure not only a perpetual business, right? Something that is going to keep working like we've been around for 24 years, as well as the cash management, like it was your first question, because I see that this is something very normal for this seasonality of the period, but for us, it's a priority agenda. Thank you so much. Thank you so much. I don't see any other question. So I would like to thank the presence of everyone. And uh, I would like to say that our investors team is still on call if you have any other questions through our communication channels. I would like to thank everybody. Have a wonderful day. Thank you. Thank you. Have a wonderful morning, everyone.